communities. We are thrilled you could join us today for our exciting webinar on assessing the impact of the climate crisis on low to moderate income consumers. As our final session of 2025, it means a lot to have you here with us today for this important discussion. My name is Linda Williams, and I am a Community Outreach and Training Manager at Consumer Action, and I'm excited to see so many of you here today for this discussion. As Earth temperature continues to rise, leading to more intense storms and extreme weather events, scientists are calling for immediate action to address climate change. However, climate change remains a low priority for some Americans. Some members of the public even rejecting the notion that it's happening at all, which makes this discussion that much more important today. However, before we jump into the session, I want to thank our sponsor, Wells Fargo, whose support made this webinar possible. Please join me in welcoming Lisa Price from Wells Fargo, who will share her insights on this timely topic. Lisa, are you there?
I am. Thank you, Linda, and welcome everyone. We are so pleased that you could join us for today's webinar. I just want to take a moment and share that Wells Fargo is just so appreciative to Consumer Action for putting together webinars on these timely topics, putting together the best speakers that can bring their insights to the table, and then bringing us all together to share this information. We're really excited about today's webinar, talking about these extreme weather events and how they can impact consumers, especially low to moderate income consumers. And how can we, as we work with clients, help them to guide them through the loss of wages, housing, and having to deal with insurance claims. So we really just are excited about being able to share insights and best practices today with all of you. And we invite you to engage in the chat, ask questions. And I just want to wish each and every one of you a happy end of the year, happy holiday season, and thank you for being here. Back to you, Linda.
Thank you, Lisa, and a special thanks to Wells Fargo for this awesome opportunity. Now, I'd like to cover a few housekeeping items to ensure it's a streamlined, efficient experience for everyone and to respect your valuable time. We understand that your time is precious, and I promise we'll do our best to make this webinar a worthwhile investment of it. Now, this is a 90-minute webinar, and it is being recorded. You will receive access to the recording within a week, along with the PowerPoint slides used by each speaker and accompanying handouts, so you can review the material at your convenience. Now, your questions are not just welcome, they are essential to the success of this webinar. So we truly appreciate your participation, and we look forward to your insight, which help us create a more engaging experience. So to submit your question, just type it into the designated box and click submit. At the end of the presentations, my coworker, Nelson Santiago, will lead a question and answer segment with our fabulous guest speakers. Now, don't forget, this is your opportunity to engage and ask questions. Also, your feedback is invaluable to us, so please take a moment before you sign off to complete a brief survey about today's training, as your input directly influences and improves our future training sessions. Now, for those of you who are new to Consumer Action, let me introduce the organization to you. We are a national nonprofit dedicated to education and advocacy. What sets us apart from other organizations is our unique approach and commitment to serving all consumers, especially those that have low to moderate income and live in underrepresented communities nationwide. We empower consumers by providing multilingual educational materials, engaging in extensive community outreach, and addressing important advocacy issues. We take great pride in our work with limited English speakers and other underserved communities across the country, making sure that everyone feels heard, recognized, and supported. For over 54 years, Consumer Action has been a trusted partner for consumers on their financial journey. Our extensive experience and ongoing commitment help us serve communities effectively by inspiring confidence in our work. Now, before you leave today, get on our website and ramble around. Take a look at everything that we have on our website. And while you're there, don't forget to download our latest fact sheet on money drains. If you're teaching money management, if you're teaching budgeting, or if you just want family members, those young grasshoppers in your family, to learn more about budgeting, download our latest free fact sheet on money drains, which will provide valuable insights into common budget pitfalls and how to avoid them. And the brochure, if you pass it out, it'll help you better serve your communities. Now, let's move forward to today's presentation. I am extremely grateful for your interest, and I am excited to introduce the knowledgeable and passionate individuals who will be sharing their insights with us today. Our first speaker is Maya Pendleton. Maya is a senior research manager on SaverLife's research and policy team, where she leads the organization's climate change research portfolio, examining how climate impacts household financial health. Most recently, she led a research initiative on energy cost burden and its effect on family financial stability. Before joining SaverLife, Maya worked at the Center for the Study of Social Policy and the District of Columbia Office of State Superintendent of Education, experiences that informed her deep understanding of public systems and equity focused policy. Maya is formally trained in mixed method research, and she uses diverse data approaches to inform policy solutions aimed at addressing poverty and systematic racial inequities. She earned a Bachelor of Arts from Georgetown University and her Master's of Public Policy and Public Administration at George Washington University. Brittany Gomez is our second speaker. Brittany is the Disaster Benefits Team Manager at Texas RioGrande Legal Service and Texas' largest legal aid provider. Her work focuses on helping low-income Texans impacted by natural disasters access financial disaster relief through FEMA and SBA assistance. With diverse legal experience, Brittany aids clients in navigating various legal issues, including estate planning, probate, consumer matters, title clearing, and administrative appeals, ensuring disaster survivors have the legal tools needed to secure their future. Brittany was an Equal Justice Works Disaster Recovery Legal Corps Fellow. She graduated from Texas A&M University in College Station, Texas, and St. Mary's University of Law in San Antonio, Texas. Audience, please help me welcome Maya and Brittany as I prepare to turn the webinar over to Brittany. I'm sorry, to Maya. Maya, you should have control.
Thank you so much, Linda. Let me just make sure. Okay, Linda, I might need you to advance the slide. Sorry.
Try again. You should, 1 minute. You should have control.
Okay.
There you go.
There we go. Great. Welcome, everyone. I'm really excited to be here today and to talk a little bit about SaverLife's work on climate and financial health. So just an idea of what we'll be going over today. I'll give you an overview of SaverLife, give you a chance to meet the organization and understand a little bit about what we do. And then I will go over really like how we came to this issue, how we started focusing our research on climate and financial health. I will share our research findings that we've learned over the years of doing this research. And then lastly, we'll go over solutions that we think will work for households and also share some opportunities for everyone to join this work with us. So a little bit about SaverLife. SaverLife is a national nonprofit. Our work is driven by our over 700,000 members who both use our platform. So we are a financial technology organization as well as a nonprofit. So we have our FinTech app, which really delivers personalized financial guidance, different savings challenges and incentives. We provide our members with referrals to services and supports. And then also there's opportunity to engage deeply with SaverLife's research and advocacy work. And we really focus on a holistic approach to financial health and support members at varying stages of their financial journey. So some members are sort of just starting to think about financial health, and then some members are preparing to buy homes. Some members are thinking about investing. So there's really a wide range of experiences on our platform. Most of our work is driven by data, research, and insight. So we're constantly fielding surveys, collecting polls, doing different behavioral testing, and looking at actual financial behavior and transactional data to really build a full picture about the challenges and also successes that our members are experiencing. And all of this is with the goal of really driving more equitable policy and also practices that protect consumers. We also use our research insights to elevate members' voices in national financial health conversation. So our members are, part of our storytelling, but they're also part of our, dreaming up our research agenda. Our members speak to the media. So like I said, SaverLife is really driven by our members, and we're using a variety of different mechanisms to really try to create a better financial situation for all. So we have over 700,000 members that really power everything we do. This is just an example of what we've accomplished with support and input from our members in the last year. So excitingly, this year we launched our AI-powered financial health navigator, which offers personalized financial advice to our members on a wide variety of topics. We've worked really closely with our advocacy panel, which is a collection of about 10 members who are super engaged in our research and policy work. And they've helped us design surveys and test policy recommendations. We've also utilized our transaction data to identify risk. So we've really been focused on what are the early warning signs that somebody is tipping over into financial crisis, and how can we support them and mitigate some of that crisis. We also always have a safe space for our members to share their experiences. This is both through interviews, but also a lot of our SaverLife members say that part of the reason why they love SaverLife is for the community aspect, feeling like they're not alone in their financial health journey. So I want to talk a bit about climate and how that relates to financial strain. So first, how did we get to this research? A few years ago in 2021, we found that our members were, nearly all of them, 74%, said that the financial impacts of climate change or weather disasters were really blocking their path to financial independence. We found that people were spending more, they were having more unexpected expenses, and this was really throwing off their ability to gain financial footing, especially that many of our members are earning low to moderate incomes. At the same time, climate has, I think, more so at that time, but even still now, is largely seen as an environmental issue, right? So we hear a lot about the hurricanes, we hear about disasters and all of those things, but what about those sort of chronic financial impacts that are impacting households on an everyday basis that are caused by climate? We found that there was not a lot of work in the financial health field to really understand how households were being impacted on a daily routine basis by climate, but also, if it's not being studied, there weren't also solutions to support households while they navigate this. So we came to this work with a set of questions, which were really centered around, one, the extent to which climate change impacts financial health. What does that look like? What does that look like at scale? How are households impacted? Are they impacted at all? Then we really wanted to understand how climate-related costs shape financial stress. So what does financial stress look like with climate sort of layered on top? We also wanted to know the extent to which households were aware of, but also able to access, which I think is the important part, and also well served by existing cost-saving measures. And then lastly, what interventions and policy solutions can support financial health and build resilience in the face of climate change? So it's taken some time to answer all of these questions, right? And I mean, this research could go on for a while, but I wanted to give an idea of the timeline of SaverLife's work around climate change. So like I said, in 2021, we really recognized a gap and that people were experiencing these impacts, but there was little research into how these chronic financial stressors were impacting households as a result of climate. In 2022, we really focused on fundraising. So really trying to get support for this work. And I would be remiss to mention this work would really not be possible without the generous support from the Wells Fargo Foundation, who have funded both the downpour research and then our continuing research on energy cost burden. In 2022, we also launched the Downpour survey, which really focuses broadly on the financial impacts of climate. In 2023, we published our sort of foundational financial health and climate research, and these findings really revealed that chronic financial stressors caused by climate and the lack of access to clean energy technologies are really prevalent among LMI households. And then in the last year, and continuing to 2025 and also 2026 and beyond, we're really expanding the work. So in 2024, we launched a survey focused on energy cost burden and how rising energy costs are impacting household budgets. And then we've also launched the Climate Futures Project, which is really a member-driven initiative that uses largely qualitative research and also foresight methodologies to partner with our members and think about what does it mean to build equitable climate futures. So this is just to give you an idea of where the data in this presentation comes from, but also an idea of like what climate research we've put out there. So we've used surveys, interviews, member stories to understand how climate shapes financial lives. So we've done webinars like this, other events, speaking at conferences often and hearing from partners what they need and what information would be useful to them. And so our work has really been done, I would say, in partnership with the field and really understanding from folks who might have been doing a portion of climate work or are interested, what type of information do you need to do your work, but also to support better policy. So I would highly recommend you check out some of our reports. And then we have these great member stories, which really help bring the data to life. You'll see results from primarily 2 surveys and over 40 qualitative interviews with SaverLife members. So there will be our 2023 survey on climate change economic impacts, and then our energy cost burden survey from last year. So getting into climate and financial health. If I had to summarize what we've learned in just 3 quick points, this would be it, right? So we've learned that climate change is already impacting and reshaping household budgets. This is creating increased financial instability, and largely the solutions are out of reach for most of our LMI members. So what does the impact of climate look like on household budgets? We're learning that largely household budgets generally are already stretched thin, right? And that's really important to keep in mind and ground ourselves in as we think about how climate is impacting already stressed budgets, right? So we see that 37% said it was really difficult last year to cover their expenses and pay all their bills, and 41% said it was somewhat difficult. So we have almost 80% saying that they're really having difficulty meeting their basic needs. At the same time, in 2023, we learned that households were pretty much already impacted financially by severe weather or disasters. So we see concerning amounts of people saying that they've missed a monthly payment on their rent, utilities, or mortgage. We see 22% of people saying they've missed like a debt payment, like on student loans or auto loans. And then we're also seeing that a little bit over 20% have lost income and wages. At the same time, we're learning that energy costs for households are rapidly increasing. So we asked our members in the past year, have your energy costs, stayed the same, risen? What would you say? And 80% of our members said that they have increased either by a lot or somewhat. So we have those tight budgets and then rising expenses, which is a recipe for disaster. And this just really, brings the data to life a bit. So 80% of our members said it was difficult to pay for their energy costs last year. And we have a member here saying there have been times where we had to delay payment for energy bills or we were on a payment plan. Because of this, households are frequently behind on their energy bills. So at the time of taking the survey, we had 40% of households saying that they were currently behind on their energy bills. We also asked them about shutoff notices, which I'll dig a little bit deeper into later in this presentation, but we also find that 48% of members say that they've received shutoff notices in the past year. So people are behind, they're receiving notices, keeping up with these costs is extremely difficult. Another way to try to sort of further distill the extent to which energy costs are taking up an outside portion of household budgets is we did some work estimating based on what our members told us their monthly energy expenditures were and their annual income. And we were able to calculate or estimate the share of SaverLife members that are experiencing energy burden, and we found that almost half are, which is pretty concerning. I also like to point out that we don't see many in that sort of like deep burgundy 13% moderate burden, and this to me really suggests that energy costs are kind of quickly escalating out of control. Like there's not much room in that sort of moderate burden. And so I should also say that the energy burden estimate means that if households are spending less than 6%, energy is relatively affordable. 6 to 10% they are moderately burdened, and then anything upwards of 10% is severe burden. So trying to understand who does this impact the most, maybe who's disproportionately impacted by these increasing costs. And we see that Black and Latino households, regardless of income, are more frequently receiving shut-off notices. I think this is really important when we think about policy solutions and equitable design. If we know that, for example, high-income Black households are experiencing shut-offs at higher rates than high-earning white households, that there's some structural barriers and issues that will need it to be thought about when we're thinking about solutions. Similarly, we see that renters are also more frequently receiving shut-off notices compared to homeowners. We did a similar analysis to try to understand if this was about income or if this was more about the housing type, and it does appear that renters, regardless of income, are receiving shut-off notices more frequently than homeowners making a similar amount of money annually. So what does all this look like for households? So this means that over half of households aren't impacted, but over a third are. So we have 36% of households that are, impacted by severe weather in the past year. And these impacts for a lot of households are contributing to increased costs. So we see that 68%, nearly 70% of households said because of these impacts, we have increased our expenses. We're also finding that 16% have lost personal property or had damage. And then we see a good chunk have also lost wages or income and had negative health effects. So I really like this data point because it shows that, yeah, increased costs, but also, you know, I'm assuming that lost property or personal damage is also increasing costs. And I'm assuming that, you know, lost wages or income or job change has also impacted your ability to cover those increased costs. One of our member stories, Adam, who is from rural Kentucky, he's a SaverLife member, really puts a fine point on what this looks like in practice for a household. What do those increased costs look like when you're financially impacted by climate? Adam tells a story about how his house experienced a flood, and because of that flood, it's really been impossible for them to get back on track. You know, they've been involved in trying to get insurance coverage to repair their house, but in the meantime, because of the damage of their flood, their electric bills have skyrocketed because now their house is less efficient. As a result of those sort of climate-driven cost increases, we're also finding that households are making pretty stark financial trade-offs. So we ask them, because of your energy bills, are you having to make trade-offs in order to afford them? We find that overall 57% of members are cutting back on food or essentials, almost 40% are increasing debt, 31% are delaying payments, and about a quarter are delaying rent or mortgage payments. And of course, when you look at the trade-offs people are making with energy burden in mind, we see that those households who are more severely impacted by energy burdens are making those types of trade-offs at larger proportions. So, I mean, getting to the part that I think we all are here because we want to solve, what do solutions look like, and what do access to solutions look like? I really like to think about the solutions on the table in two ways. So there are a set of programs that already exist that should be readily available for people to access if they need support in times of crisis to manage their energy costs. So there's budget billing, there's a low-income home energy assistance program, utility financial assistance program, or weatherization programs that can make your house more efficient and therefore lower your energy costs. Sort of unfortunately across the board, we see lower numbers than I think what we should see, given the need that I just outlined of members being able to access these important programs. We also see on the other side of things, when we're talking about like long-term resilience, what might make households a little bit more efficient and save them some money down the road, we see that interest in clean energy among our members is very high. So not only is it high, but it's only increased. So we've asked the same set of questions twice now, once in 2023, once in 2024, and we see that interest has really grown a lot among our members when it comes to these climate resilience activities. And here's another member story that just really underscores the interest. So Jose has worked hard to buy his home. He's earning a low to moderate income, and he's, fixed up his home, and he knows that the generator is a necessity, but it's very hard to afford to upgrade his home to make it more resilient. And this really echoes the reality of a lot of the SaverLife members face, which are the interest is high, but the percent of people who currently have access or are able to adapt to clean energy is low. So 81% of members say that they're interested in energy efficient appliances, but only 8% are actually currently have them. And when we ask members, why not, what best explains why you do not have these, more than half of interested members report that clean energy upgrades are really unaffordable without financial assistance. So they're saying that they would need some sort of loan, other financial support in order to make those upgrades. And we have, a quote from another interview with a SaverLife member saying, they say solar saves you money, but you have to be able to afford it first. So that's an overview of our research findings, and then I'll talk a little bit about how we are working to create solutions. So I mentioned this earlier, but one way that we're really thinking creatively about how to co-create solutions with our members is through our Climate Futures project. This project is funded with support from the Robert Wood Johnson Foundation and really dives deeply into members' lived experiences, their needs, and their aspirations when it comes to building an equitable climate future. So we'll be hosting member sessions, which are a little bit like focus groups, but different because we're using Institute for the Future methodology. It's called Foresight, which is a way of thinking about the future in the present moment and to unearth new possibilities. So we're really excited about this project because I think it's an opportunity to center people who are often excluded from policy conversations, and out of this we'll be creating scenarios that are, external facing, but also we're hoping to create with our members a policy principle document that sort of provides guidance on what equitable policy looks like when it comes to climate. We are also continuing to build our evidence base. So one thing that we do is operate a semi-annual climate tracker survey, which collects sort of not quite real time, but more rapid time than a traditional survey project. And its purpose is to collect seasonal data on the financial impacts of severe weather, but also household energy costs, and then awareness and access to assistance programs. We're also partnering with organizations to expand equitable clean energy access. So we work really closely with an organization called Inclusive, which is a national network of community development credit unions and CDFIs, to explore affordable, equity-centered financing models to help households make that clean energy transition. We're also providing our members with direct support through digital tools. So we learned that, after a time of crisis, I think probably many of you know that it is very difficult to make tough decisions, make the right decisions, and we're hoping that our financial health navigator is a trusted source of information that can provide people with clear, good information about what steps will best support their financial future. And then lastly, we've been looking to the state and local level and, really thinking and lifting up policies that help households most impacted by climate change. For example, there's the New York Heat Act, which is on the table, which I think limits shutoffs at certain extreme weather temperatures. So here are some ways that you can join us in the work. You can support us in strengthening the climate tracker. So we're always looking for feedback to our climate tracker. Like I said, this work is held at SaverLife, but we really envision this work that is contributing to the financial health field and thinking about how households can be better supported. And so with that, we are curious to know what information helps you advocate for better policies that we might include in our tracker. We'd also love for you to stay connected as we release insights from our member-driven futurism project, which I'm really excited about. There are many ways to partner with us. We have a wealth of data, from survey data, interview, qualitative data, to transactional data that we're always happy to use with our partners in creative ways. And then, join us in driving inclusive solutions that really build climate and financial resilience for households. And so if you have any questions, if you'd like to have a chat or talk about any of these in more depth, you can always contact research@saverlife.org. And I think that's it. I will turn it back to Linda.
Well, thank you. Now let me turn the presentation over to Brittany. And yeah, Brittany, you should have control of the deck.
Okay, let's see. There we go. Hi, everyone. So I am an attorney at Texas RioGrande Legal Aid. I've been doing disaster work since I became a lawyer, and my first job was at the United States Small Business Administration in 2018. So about 8 years of doing work on behalf of disaster survivors. And I have worked over 10 federally declared disasters. And as Linda mentioned, I do primarily work with disaster survivors on FEMA, but I do a variety of other areas of law, most of which allow me to come in contact with disaster survivors who are also experiencing some consumer-related legal needs. So for this presentation, we're going to be talking about contractors and financial recovery, do an overview of FEMA and some common scams that disaster survivors might see after a major storm. So generally, we think of legal issues after a major disaster in a timeline of legal needs, and those tend to occur in these short-term, mid-term, and long-term. So in the first 1 to 6 weeks after a disaster, we often see an increase in housing-related legal issues, and those are for individuals who are experiencing lease terminations or evictions because of the disaster, or maybe because of non-payment of rent because they lost their job from the disaster. We see insurance claims and FEMA applications, a lot of document replacement cases for people who need to replace those vital documents like driver's license or social security cards. And then we see income protection legal issues like wage theft, or individuals who may have lost their job because of the storm and need to apply for disaster unemployment assistance. Maybe they now qualify for public benefits applications and need to be able to get income that way. And then sometimes we see disaster survivors who need to apply for U.S. Small Business Administration disaster loans, which are not just for businesses after major disaster declarations, but they can help individuals repair or replace their homes as well as their personal property. So we can see here in this first 1 to 6 weeks after the event how some of these direct consumer legal issues might start coming up, as well as how income that's been impacted by a disaster can start to create some tenuous situations for disaster survivors and consumers. Moving into that 1 to 6 months after the storm, we're starting to see FEMA appeals. Individuals have already applied for FEMA, but now maybe they have been denied access to financial recovery, and they need to appeal that, or maybe they were not awarded enough financial recovery to repair or replace their personal property. As well as we're starting to look at foreclosure prevention issues, maybe some title clearing, real property, and probate issues, which often act as a barrier for disaster survivors to be able to get financial recovery from government and nonprofit programs like FEMA. So getting a hold of, air property and cleaning that up and clearing the title for survivors is actually a really important legal issue that we start to deal with, hopefully long before the storm, but definitely in this 1 to 6 months and long term after the storm. Here is kind of in this time frame is where we see disaster survivors starting to get some financial recovery. Maybe they're getting an insurance payout. So we start to see repairs happening, and with repairs, we start to see contract disputes, issues with contractors, maybe scams, insurance scams, and price gouging. And then we, of course, have our other legal issues like family and education and dealing with powers of attorney, as well as maybe emergency custody modifications. And then in the long term, we consider that to be 6 months to years after the event. I will say one of the first disasters that I worked was Hurricane Harvey. We still at TRLA have Hurricane Harvey survivors applying for these long-term legal issues. And Some of those are foreclosure related. Some of those are FEMA recoupments. So while we often think of consumer legal issues and debt collection often being from unpaid bills or credit cards or mortgages or foreclosures and things like that, the federal government, particularly FEMA, has a mechanism to be able to debt collect against a disaster survivor if they believe that maybe a fraud was committed, or if a disaster survivor did not use the funds as FEMA had intended them to. And because it's the federal government, they have additional powers and mechanisms to be able to debt collect against disaster survivors. So we see those cases come here, as well as some other civil, just general civil legal issues like bankruptcy and tax relief applications. So when talking to consumers and disaster survivors about contractors, we always advise our clients to not sign a contract with any sort of blank in it. Those blanks tend to get filled in later, and those new terms are generally never favorable to the consumer. So it is very important that we advise our clients and we talk to consumers about making sure that they carefully read the terms of the contract, every single word, and make sure they take their time. They don't feel pressured into signing these contracts on the spot. And again, making sure that nothing is blank when they do sign the contract, so that they don't end up with an additional term that maybe is not in their best interest. We tell survivors that it's important to verify licensing. Now, not every state has licensing requirements for contractors. Sometimes there's just specialty licensing for plumbers and electricians, but general contractors don't have to have certain licensing requirements, or subcontractors don't necessarily have to have it. So it all depends on what your state law requires. So I encourage you to consult, your local or your state's jurisdiction over those particular issues. But in Texas, many of our contractors are not required to have licensing, but we want to keep in mind that survivors do look into the company and their legitimacy, looking at the Better Business Bureau and online reviews, even talking with their neighbors up and down the street who are experiencing maybe some of the same disaster-related legal needs. Often contractors will go door to door, and so it's maybe a good idea to talk to your neighbors and see what their interaction with that contractor was like, and what their opinion was, and also obtaining comparison bids, right? So you might compare your bid with the bid for your neighbor, but you might also get additional contractor bids for the repairs to your property. We always like to tell our clients that it's a good idea to generally get about 3 different bids on repairing their homes. And then from there, they can look at all of the terms and the conditions and pick which one financially fits their need. And that those estimates, those bids, they all need to be in writing. And they should speak with, like I said, speak with their neighbors to verify what their experience with that company was, or maybe they see online on Nextdoor. That is often an app our clients look at when looking for contractors. So look at what other customers have been experiencing and writing online about this contractor or this company. Of course, we want to make sure and tell our clients that getting amendments to their contracts in writing is essential, and trying to get those amendments signed by both the contractor and the client, so that there is full agreement as to what the contractor is being asked to do and what that cost is going to be to the disaster survivor. We want to make sure that everything that is promised to the consumer is in the written contract. So often what happens is a contractor will come through, there will be a walkthrough, they'll talk about a lot of things, and then maybe there's some additional conversation that was done verbally, but didn't necessarily make it into the written contract. Consumers should insist that it specifically states what the contractor will do, when the work will start, and when the work is estimated to be completed. We all hear about home repairs and construction projects that tend to lag on forever and forever, and that can be expected a little bit to a reasonable degree when working with a contractor. Issues do pop up that weren't necessarily anticipated, and so some of those projects will last longer. But what our clients are often surprised by sometimes is their contract won't state when the work will start, and they may sign the contract and pay the contractor either a down payment, or they may end up paying the contractor the entire price of the contract, which is not something we advise, but sometimes it happens. But there is no date in which the work will start, and then they just don't hear from the contractor, and they get very upset. And it could be months in which the contractor is planning to start. Maybe they have multiple homes that they're repairing before they intend to work on your clients, which might be a problem for your client. I mean, maybe they would have gone with a different contractor at that time. So when working with disaster survivors and dealing with this, we always want to try to make sure that that contract with the repair company states when the work is anticipated to begin. And then making sure that consumers are aware that most contractors won't allow them to change their mind for free about how they want the work done or the materials that they want done. Some contractors will charge service fees or for changing the work order and contract. So you want to make sure that all of those terms are written into the original agreement as well. And then to keep and get copies of everything that is signed at the time you sign it. One issue we see a lot after disasters is that disaster survivors sign a contract, but they never get a copy of it. And so they are not sure what the actual terms of the agreement are, and they can't prove it, and their contractor is not providing them a copy of that. Sorry, one moment here. It looks like there's been a little bit of a delay on the slide. There we go. So when choosing a contractor, we always encourage our clients and consumers to try to pick a contractor with an established physical address. One, this kind of lends to a little bit of legitimacy where they may be a more established company or a more established contractor, but also this is kind of a legal thing to have in your back pocket in the event that you do need to sue your contractor. Having an established physical address is a very important step in being able to get in contact with them, but also to be able to get them served with any sort of legal documentation, demand letter, or lawsuit in the future. So that's always a great thing to try to encourage consumers to look for. Verifying any claims that the contractor is making about energy savings, improvements to home value, added advantages. Often we see these things come up with solar panels or water filters, but there's other energy efficient, products out there that contractors may overstate the increased saving or value, or maybe don't fully transfer that information or translate that information to the consumer. So we want to be able to take the time that you need to review the contracts, but also time to verify any claims about those additions and energy saving or home value improving products that they might be encouraging you or the consumer to purchase. We're always telling consumers to be wary of the low ball bidder, whose price is much lower than everyone else, mainly because the quality of the materials often is what is in question there. It may be that they are using materials from a different disaster survivors project. We've seen that in the past. It may be that they are using very cheap, inexperienced labor, maybe day laborers who are not, haven't been doing this for a very long time. And so like I said, we've often seen second-rate materials being purchased in order to satisfy that low ball estimate. So every state has an attorney general's office, and I would almost guarantee that every single one of those attorney general's office has a consumer protection office in which the AG and their attorneys look into contractors, insurance companies, any sort of consumer related scam or scheme that might be going on. And so we encourage consumers to also contact their attorney general's office via hotline or online if there's a mechanism to file a complaint that way, and use that as a mechanism in making sure that if they have been, or if they feel like they have been ripped off, or that they have been taken advantage of by a scam, that they contact this hotline or their state's hotline. In financial recovery, we're going to talk about, managing disaster survivor consumer housing situations, as well as dealing with property damage, how consumers can manage their bills, and then while also keep being mindful of trying to keep an eye on their credit. So when managing mortgage payments, consumers can and are often worried about missing a payment. And what we encourage consumers to do is call their lender or their loan servicer right away and start asking about ways to maybe make their payment more affordable. They might be a loss mitigation option, maybe looking into some sort of disaster forbearance, or if there is a way to modify their loan in order to keep them up to date and preclude any sort of question about foreclosure or anything like that. So it's always better to get ahead of it if you know that maybe you've lost your job because of the disaster, or if your home has been completely destroyed because of the disaster, but you still need to make the mortgage payments, but now you have incurred an additional housing cost by needing to live somewhere else while you repair the home. Talking with your loan servicer right away about what your options are as a consumer is going to be very important. And for managing rent payments for renters, this is also going to vary a little bit by state and how your state interacts with rent payments and landlords after a disaster. Texas generally does not implement any sort of eviction moratorium after natural disasters. I know some other states like Florida might, but generally Texas does not. So the rules here are that even if you are able to continue living in your home or not, you need to keep up with your rent payments and be sure to review your lease to understand if there is some sort of force majeure or natural disaster clause in your rental agreement, what those terms are. And if you're not able to live in your apartment or rental home at that time, maybe it's destroyed or there is no utilities, water or gas, knowing that here again in Texas, it might differ in your state, but in Texas, it does not necessarily end your lease. And that you need to look to your lease agreement about how you and your landlord can terminate your lease. And that should be done in writing. That way you are always creating a paper trail regarding that lease termination and trying to figure out whether or not you are still going to have to pay a portion of that rent for that month, or whether or not you're going to be able to get your security deposit returned to you. When handling insurance, it is important to check with your insurance company and your mortgage company or servicer about how and when the insurance money is going to be distributed. So often we see that survivors are a little bit shocked when their insurance company issues a check. They know that they're getting a payout, and they are eager to get started on repairs right away, but they get in a check for their insurance proceeds, and it has their name as well as their mortgage company listed on it. And so when they go to the bank, they are not able to cash it. And that is usually when they learn that they actually need to turn the check over to their mortgage company, and that their mortgage company will pay them out their insurance proceeds as the repairs and construction projects progress. And often that is very confusing for some consumers. So it's important after a disaster or even before a disaster that consumers review their documentations with their mortgage company, talk to them about how that insurance check will need to be cut and who's going to actually get the payout. And then what the process is for working with a contractor and getting them payments on time so that it doesn't stall the repairs and also doesn't create an adverse relationship based on payment between the consumer and the contractor. And then knowing that as you are going forward with repairs, your contractor may request some sort of mechanics lien to be placed on your property during the repair process. We always talk to consumers about the ability to have mechanics liens done in phases of their project, and as the phase of their project is completed and they're moving on to another one, to request that that mechanics lien be released as they go. And then just reminding consumers that not all of their insurance will pay for the damage to all, insurance will not necessarily pay for all of their damage to their home. It may be less than what they are anticipating. So step one is to call your insurance company and to start filing that claim. And then step two is to apply for aid for government organizations as well as nonprofits. We talk to disaster survivors all the time, and we tell them to file their insurance claims if they have insurance right away. And we also tell them to apply for FEMA assistance and assistance from the United States Small Business Administration at the same time. FEMA will likely tell the consumer, the disaster survivor, that they need to deal with their insurance first, and once their insurance either pays them or denies them their claim, then they can apply for FEMA. We tell consumers to do it at the same time, primarily for the reason that insurance companies after disasters can take a long time to process claims, and FEMA application deadlines are generally 60 days from the date of the disaster. We do not want a disaster survivor not applying for FEMA on time because their insurance company is taking too long. So we want to be able to preserve their application for FEMA. And on their application for FEMA assistance, it will ask if they have insurance. They will check yes, and they will be denied FEMA assistance. But that's okay. That's what we tell them to anticipate while they continue to work with their insurance company, but then they can preserve their ability to appeal FEMA's decision if they need to, if their insurance company denies their claim. And then again, for them to talk to their mortgage company about making adjustments to their payments if they need to avoid any sort of foreclosure or default. So FEMA has a housing assistance program in which they can provide financial assistance for temporary housing, home repair, home replacement, and permanent housing construction. The max award for housing assistance, it's actually more than this $43,000. That number gets adjusted annually. But so it's not enough to completely replace a home because FEMA is not insurance, but it is a grant in which a survivor should not have to repay FEMA back on. And so temporary housing assistance is generally direct payments from FEMA to a hotel. We think of that as like a voucher assistance program. It's supposed to be short-term assistance, maybe up to 2 weeks. It can last much longer than that in these really large-scale disasters, but it's where FEMA pays the hotel directly and a disaster survivor is able to stay there. You might see temporary housing units under that program, like FEMA trailers is often a big one. But also rental assistance, which is financial assistance that gets provided to a disaster survivor in 2 to 3 month increments for them to be able to pay rent while they work on repairing their home. For rental assistance, they do have to reapply and recertify their need for rental assistance every 2 to 3 months. Home repair assistance is exactly what it sounds like. A disaster survivor applies for home repair assistance to fix their home, but they do need to be able to prove that they have home ownership. So that can be through a deed or some other official record transferring title to them. But often what we see with LMI clients is that they don't have official legal documentation of their home ownership. It may be an heirship property that they inherited, but it was never probated. So FEMA does have an alternative standard which allows for individuals to provide an affidavit or a will, a bill of sale, an affidavit of heirship for heir properties. There is also some exceptions there for manufactured housing as well. And then home repair assistance, like I said, is not going to be able to make the home fully what it was before the disaster. It is to make the home habitable, which is safe and secure from hazards or threats to occupants, and sanitary, so free of health hazards. And then home replacement assistance is a little bit more rare, but in situations where you see a home that maybe is completely off of its slab or was completely destroyed, then there might be an option for FEMA to provide financial assistance to allow them to replace their home, but often that needs to be paired with some sort of other loan in order to get the housing project off the ground. FEMA also has another financial assistance program called Other Needs Assistance, and that is where it provides financial recovery for personal property, cleaning and sanitization, transportation assistance, medical and dental, funeral and burial, as well as childcare, moving and storage, serious needs assistance, and displacement assistance. I won't go into detail about all of these because it's pretty self-explanatory as to what these are. But for personal property assistance, that's going to be for all of the damaged items, furniture, appliances, clothing, things like that inside a disaster survivor's home. Transportation assistance is for vehicles that are damaged due to a disaster. Generally, FEMA only provides financial assistance for one vehicle unless there is a reason why more than one vehicle is needed. So there are exceptions, like you have two individuals who need vehicles to go to work, so they need transportation assistance for two destroyed vehicles. And then some of the newer programs, serious needs assistance and displacement assistance, were created and implemented in 2024. Serious needs assistance is a one-time $750 plus payout to disaster survivors to help with food, gas, water, diapers, formula, any kind of sort of immediate critical need that they need after a disaster. And then displacement assistance is as financial assistance paid directly to a disaster survivor, maybe if they need to rent a hotel room on their own, or if they need to stay with a family member and they need to be able to pay them a little bit of money to be able to stay there. Those are the other types of financial recovery that a consumer can receive from FEMA. There are multiple ways for a disaster survivor to apply to FEMA. Generally, the deadline is 60 days after the date of a major disaster declaration. That can be extended at the request of the governor and has to be approved by FEMA. But for example, the Central Texas floods happened this year on July 4th. And so the initial deadline was September 28th, and then that got extended from there. And they can, disaster survivors can apply online, or if FEMA actually has an app, they can apply over the phone, or they can apply in person at a disaster recovery center. To apply for or to be eligible for FEMA assistance, you have to be a U.S. citizen, legal permanent resident, or identified by another statute. There only needs to be one eligible person in the household, and it can be any adult member who qualifies for FEMA, or it can be a minor child in which a parent or guardian applies on behalf of the minor child. And then everyone qualifies for emergency non-cash assistance. So that's like sheltering and crisis counseling programs. A disaster survivor has to live in a disaster declared county at the time of the storm, unless they are only applying for other needs assistance. Then they can have been working or visiting the disaster area at the time of the event. The damage is confirmed by a FEMA inspection that it is in fact disaster caused damage, and then they have to have insufficient or no insurance coverage. So again, tips in talking to disaster survivors and consumers about avoiding foreclosure is to go ahead and get ahead of the problem and talk to their mortgage servicer and ask what options and remedies are available to them. And by calling their mortgage servicer, they might be calling someone like Fannie Mae, who might be able to provide relief up to 1 year. They may be able to engage in a loan modification, and they have disaster recovery counseling programs. They may be calling someone like Freddie Mac, where they are looking at a forbearance and repayment plan, or maybe some sort of payment deferral or flex modification. If it's an FHA loan, they may be able to stop or delay the initiation of foreclosure for 90 days. And those are typically called foreclosure moratoriums. The Veterans Affairs, the VA actually has regulations, federal regulations that allow for prepayments or advances, loan modifications, and supplemental loans that can be made available to disaster survivors in appropriate cases. And then if it is a USDA loan, there are home repair grants available to those who have USDA loans, as well as payment assistance or moratoriums that might also be available to them. Just going over this in really quickly here for debt collection. In Texas, we have a Debt Collection Practices Act. There's also a federal law, the Fair Debt Collection Practices Act. And then I am almost positive that every state also has their own version of a Debt Collection Practices Act implemented in their law. But generally, these types of laws prevent creditors from calling and engaging in threats of violence or criminal acts, calling and using profane language, calling their consumers job, or failing to identify who holds a debt, or filing a suit that's past a general 4-year statute of limitations. And the Federal Fair Debt Collection Practices Act also has protections for a debtor that includes the penalty of collecting a debt that is not owed. This is something that you will need to look to your state law on, but because other states do have wage garnishment, but for example, some don't. And in the state of Texas, we do not have wage garnishment other than for things like child support or taxes. But exceptions arise when a consumer paycheck may come from another state that does allow garnishment. And then federal government, as I mentioned, also has the ability to garnish wages in Texas on things like defaulted student loans or other federal debts. Again, FEMA recoupment can happen, and they can access things like your income tax or other types of federal benefit payments. So those are things to be aware of. But again, this is going to vary based on where you are located and what state you're located in. And then it's important to know what being judgment proof is for a consumer. So in Texas, a debt collector, even after a judgment, cannot take a consumer's homestead where the consumer has lived for over a year. They cannot take at least one vehicle per person of driving age in the home, certain personal possessions and tools of trade. And there's a code in Texas which lays out what exempt property there is. So often we find our LMI clients tend to be considered quote unquote judgment proof once you lay aside the exempted property. But that doesn't mean it doesn't still happen, and that has to be taken care of usually by hiring an attorney or working with legal aid to make sure that the debt collector isn't doing something unscrupulous. Creditors with a judgment can use options like a writ of garnishment or receivership to take the money from a bank account. And because of this, a consumer with a judgment against them might be a little wary about putting their paycheck or their money into a bank account. They can look at options like considering bankruptcy or coming to some sort of settlement on their own terms with the creditor on the judgment to avoid having their bank accounts wiped clean. But even with a judgment, a creditor cannot and should not take a consumer's bank account funds if the money is from Social Security or Social Security disability, child support payments, unemployment, and there are several other forms of exempt funds there as well. But again, we do see that happen sometimes, and that is when it is often helpful to have a lawyer step in. So lastly, we're going to talk about scams and how a consumer can avoid scams after a disaster. We talked about not making decisions under pressure, not paying too much because you're in crisis, staying up to date on possible scams in your area, and then protecting yourself as a consumer from identity theft. So it's important to ask questions and be alert to red flags and warning signs that are coming up. If the person is trying to sell you a product or a service, or they won't answer your questions, maybe the paperwork isn't lining up, It's great to ask questions like, can I see your identification? Can I see your contractor's license? Can you provide me recent recommendations from individuals you've worked in this area? How long have you been in business? You will often see how quickly a scammer will stop engaging with the consumer in order to avoid answering any sort of question like that. And then confirming identity. So some con artists might pose as government employees or insurance adjusters. They can easily fake titles and uniforms, but they can't necessarily fake identification. And one thing we always tell consumers is to call the organization directly to verify that a person works there, to never give out their personal information to anyone that they don't know, and to remember that government employees are not going to ask you for payment or financial information like a routing number or direct deposit, bank account number. If something like that is happening, you should contact the company directly over the phone and confirm that that is actually something that needs to be provided. So common types of disaster scams that we see, unfortunately, some scammers do impersonate charities, asking for donations, or maybe even trying to get disaster survivors to apply with them in order to receive donations. We see individuals who try to pretend to be government employees like FEMA. All FEMA representatives have identification, and they should and will show it to you if you ask them to. But if you're unsure, you can call FEMA's hotline and confirm that, you know, an inspector is there, that they did send them out to inspect your property that day. We see a lot of mortgage repayment scam type situations where they might be helping or offering to help with mortgage payments or relief or things like that. Again, it's just important to contact your mortgage company directly to avoid any sort of mortgage repayment scam. And then robocalls, where you might be getting a call from like a recording promising government grants or helps with application. Again, it's important to verify that information in that call independently. And then for identity theft, we talk to consumers about calling or emailing the fraud departments of their companies, the banks, all of that, to let them know that they believe that they may have been a victim of identity theft, contacting the 3 credit reporting agencies and asking for security blocks to be placed on their credit report, and to review and correct any errors by sending dispute letters, changing their passwords, pins, and logins, getting contact. Oh, they may need to make a police report with the local police department and file an affidavit of identity theft. They can also go to the FTC website, report identity theft, and they also have an ID theft recovery plan, which is really helpful for some consumers to go through to make sure that they're taking every step and precaution available to them. They should review their bank statements and dispute unauthorized charges, and then they may need to report their identity theft to the IRS's website. And that is everything I have. I did just want to quickly say that most of the information from that presentation is sourced by the Consumer Financial Protection Bureau's website. And so that is also an excellent, excellent resource for consumers. But I will pass it off to Linda. Thank you.
Thank you, Maya and Brittany. Audience, now it's time to hear from you. We need to hear those questions. Let's get started. Nelson, are you there? Do you have a ton of questions for Maya and Brittany?
Yes, Linda, can you hear me okay?
I hear you just fine. Nelson, go
Great.
ahead.
Yeah, we do have questions. If you want, let's see. Well, just on, since you just mentioned scams, Brittany, somebody's asking if you can mention anything related to scams that might be on social media or anything to be on guard in terms of social media.
Yeah, that's definitely one area we see where some scams happen. Maybe someone's reaching out to you through a direct message, or you see something that looks like what might be a GoFundMe page or a page for someone who might be impersonating a disaster survivor, a disaster impacted individual. I do know websites like GoFundMe tend to try to verify as much information as they possibly can on those websites, but that is another area to be cautious of. And you can report scams through the social media websites like Facebook and Instagram. They all have mechanisms to report what you think is a scam.
Thanks, Brittany. And you know, we've also heard of scammers that pretend or that offer to get you better results in your GoFundMe campaigns, yeah, of course, for a price, and then they do nothing. So you that's another scam that's out there actually. Um, One question, Maya, you talked about how, you know, more and more people are finding that uh, utility costs are taking a larger chunk of their budget. SaverLife does so much to help people with budgets. Are there any tips, best practices that you're offering consumers around how to adjust their budget?
Yeah, I think that from a budget perspective, we're always putting out member-facing content about budgeting tips and um, like simple methods, like making sure that your windows are fully closed and all of those good things. But I think what's also true for us is that a lot of this extends beyond what individual households can do. And so we've really been also focusing on connecting people to services, making sure they're aware of various support services if they qualify and things like that, because, you know, why individual actions are good. I think a lot of our members are doing everything they can and are looking for some outside support too.
Great, thanks, Maya. Also, one of your slides, Maya, talked about how lots of members are not able to access the low-income assistance programs that might be offered by utilities, despite needing them. Can you talk more about what is meant by not able to access? Is it that they don't qualify or they don't know how to get signed up?
Yeah, it depends on the program. For a lot of them, people aren't aware that they exist in the first place, which is concerning. So we found large numbers of people who didn't know that they could sign up for budget billing or use their utility company's energy assistance. I think with federal programs like LIHEAP, the issue there is around the lack of investment in those programs. So frequently with LIHEAP, for example, those programs are at capacity and running out of funds. And so they're not promoted heavily because states or local offices know that they would have to turn people away. And so one of our recommendations is obviously to increase federal investments and utility assistance broadly.
Okay, thank you. Another question here. After a disaster, there are also out-of-state contractors that will contact people. Um, Brittany, you talked about sort of vetting or researching the contractor you may be hiring. Do you guys have any experience in how to deal with out-of-state contractors or how to vet them?
Yeah, so we see that a lot after these large scale disasters as well. I think the same mechanisms are in place, right? Is Googling them, doing your research, making sure they have physical addresses, going to their websites, making sure that their website actually is up and running, and then looking at any sort of complaints online that might be out there. Of course, people make complaints all the time and they may not be valid, but it is still indicative of kind of the general consensus of what's out there. And so sometimes what we'll see is that there will be a handful of disaster survivors who maybe went on a website like Yelp or on Facebook and said very consistent types of complaints about a contractor. Licensing requirements, again, verifying that might be a little more difficult if they are from a different state, but you should still be able to contact the licensing authority that regulates them in that state if there are licensing requirements for them. And then looking at their identity or their IDs, if they have any sort of business card or anything like that, and just doing as much research and putting in as much effort as you can to verify that they are who they say they are and that they're reputable people, because not everyone who's coming in from out of state is a bad actor, but it's just hard to know who you're dealing with.
Okay, thank you. Another question here, any guidance for disaster survivors who are concerned that accepting lump sum payments or financial assistance, loans or grants may disqualify them for public benefits?
Yes, so as for FEMA, though FEMA financial assistance does not impact public benefits. It is not considered income. Your insurance also generally should not impact your public benefits because that is not necessarily considered income. But when you are, if you are an individual who receives income-based public benefits, or maybe you receive disability and Medicaid or those types of things, then if you are getting lump sum payments from a nonprofit or from an individual, or if it comes from the fire department, any sort of lump sum payment is definitely going to be a red flag for the agency or who is providing your public benefits. So we always advise survivors that, one, before they accept any sort of large lump sum payment, to try to contact legal aid and let one of the more experienced attorneys in that area advise them about the steps that they need to take, whether that be spending down the money as fast as possible to get their public benefits reinstated, or maybe it is that there is certain types of lump sum payments that may not actually impact them. But yeah, it is definitely a concern, and it does in certain situations impact it, but financial assistance from FEMA will not.
Great, thank you. You mentioned contacting legal aid. Someone also offered and reminded us that to find your local legal aid office, the Legal Services Corporation at lsc.gov is the place to go. Do you have other suggestions besides that?
Yes, almost if you Google your state bar, so for example, State Bar of Texas, it could be the Florida State Bar or wherever you reside. If you look that up, they generally will also have the contact information for your state's legal aid programs. Here in Texas, we have 3 LSC funded legal aids, but we also have a lot of legal aids that are not Legal Services Corporation funded. So a quick Google search will pull it up. Going to LSC's website is also a way, but also checking for your state bar of whatever state you're in will also have that contact information for you.
Great, that's a great suggestion. And somebody's asking specifically here, Brittany, for you, does the maximum transportation assistance amount vary by state and disaster? They said the max replacement amount for February Kentucky disaster survivors, $7,875, they're saying. So does it vary by state and disaster?
It's a great question. And when we speak about transparency, it's not, I'm not sure. I don't have a lot of documentation from FEMA or from your state who, like in Texas, Texas Health and Human Services is the one who administers our transportation assistance program or funds. And so I do believe it can vary based on disaster and fiscal year, and a lot of other things may impact it. So it's a great question. I just don't have the answer for you. I'm so sorry.
Okay, well, if there's any, if you come up with anything you want to share, we can also share it with people next week when we send them a follow-up email with the recording link and the slides. Also, Maya, you talked about a lot of people being interested in solar, et cetera, but not being able to afford it. Some states have programs with their utility, with the utility regulator, through the utility regulator, that help with paying for solar. Have you done any research around that? I think in California, for example, there's a nonprofit called Grid Alternatives that contracts with the state of California. Are there other things outside of the country that you've researched?
Yeah, but that actually hasn't been a subject of our research, but we are aware of a few members who have utilized different programs that they have access solar, but that's definitely something we'd like to look into.
Okay, great, thanks. Let's see. Also for Maya, it says, question is, did your surveys uncover higher insurance cost as a problem for consumers?
So we did not cover higher insurance cost. We covered gaps in insurance in our first research, which we found pretty significant gaps in the insurance that people have available. So part of that is due to affordability, right? Like people simply can't afford it. But also part of that is due to other reasons, but we haven't looked into cost specifically.
Okay, great, thank you. Another, just again with cost, maybe Brittany, you have other thoughts. The question is, or the comment, we've seen the cost of homeowners insurance exploding over the last years. This is creating an affordability crisis for many homeowners, especially those whose mortgages include escrowed insurance. Any suggestions on the best practices for securing lower cost homeowners or flood insurance?
I would probably say, I mean, it's a really tough one because the insurance costs across the country have also been exploding. And I think the best answer I have is one is to just shop around and try to find the best deal you possibly can. But I do believe that there are insurance cooperatives out there as well, in which you can pay into a fund if that's something that's of interest to you, and researching that, that's also an option. But knowing that flood insurance is always backed by and comes through FEMA, through the National Flood Insurance Program, or at least for now it does. So regardless of whether you're getting that flood insurance from maybe Allstate or State Farm or whatever insurance servicer or provider, the actual policy is coming from the National Flood Insurance Program, so that amount should be comparable across the boards. But for other types of insurance, your best option is just to shop around and find the one that gives you the best deal for the best type of coverage that you need. And then also checking the National Consumer Law Association's website, as well as the Consumer Financial Protection Bureau and the Better Business Bureau's websites, and looking at some of these insurance companies and making sure that they don't have any sort of, lawsuits or claims against them for deceptive trade practices, or there's a lot of legal cases going around for some of these insurance companies. And so maybe doing some additional research on if the company is in any sort of financial or litigation trouble at this point. That would be another thing you could do.
Okay, thank you. Have either of you heard of any complaints coming through regarding, after disaster, lowball offers to buy your property? That's in distress as it is.
We do see that a lot after some disasters. What I would tell you is, if there is any sort of government buyout program that's going on, and someone comes to your door or calls you about buying out your property, I would investigate that and research that online. If it is a government buyout program, there will be lots of public notices and comments and availability of information online for you to figure that out. You can also contact your representative's office about those types of programs and see if there's anything that is actually being done. That is one kind of scam that we are always talking to disaster survivors about, is that people may come in and tell you that they're with the buyout program and then try to buy your property for undervalue, or get you to sign something transferring your property over to them for nothing at all. So on those things, I would be very wary and do your research on that as well.
Thank you. And then one last question, then I'll turn it back over to Linda. Someone here says that the process of applications, et cetera, sounds overwhelming and might be too time consuming for, say, working parents. Are there any services, sources for one-on-one help to navigate the process and complete or submit applications and paperwork?
Yes. So many of the legal aids are, after these major disasters, do their best to get into these disaster recovery centers to be able to meet with disaster survivors one-on-one. And depending on the resources of each of those legal aids, a lot of us attorneys do help disaster survivors navigate through multiple different types of programs. And then help them appeal their decisions on that. So again, you can look at legal aid as a resource for that. Additionally, if financials become available for programs for disaster case management, then there will be nonprofits in the area who have received grant money from the government to be able to run disaster case management programs, and their job is to be paired with a disaster survivor also to help them navigate these multiple applications. But disaster case management can come weeks, if not months, after these disasters. If applying to all of these and all of this information is very overwhelming, which is totally understandable, and we see that a lot, legal aid is maybe one place you can talk to somebody about kind of consolidating that and having an attorney or a paralegal help you through the process.
Great. Thank you so much, Maya and Brittany. I'll turn it back over to Linda.
Thank you, Nelson. And let me join Nelson in thanking Maya and Brittany for those awesome presentations. Rock. If you've enjoyed the webinar and wish to support consumer action, there are several ways that you can do so. Donations can be made online via credit card or PayPal by clicking the link on the screen below, or by visiting our website. Alternatively, you can mail a check to us at Consumer Action, Attention Membership Giving, 57 Post Street, Suite 708, San Francisco, California. Another impactful way to support us is by subscribing to our YouTube channel. Subscribing is entirely free and it comes with several benefits. You'll receive a notification whenever we upload a new video, and your subscription would help signal to YouTube that our content is valuable, and that would enhance our visibility to a broader audience. Once more, a huge thanks to our guest speakers for their outstanding presentation. Like I said before, you truly rock. And a special thanks to all of you for taking the time out of your busy schedule to be with us today. It is your support and participation that make our events meaningful and successful. And before you sign off, please take a moment to complete that evaluation form. Your feedback is vital and will make your voices truly matter in shaping the future events and help us improve our events. Before I sign off today, this is not only the last webinar of 2025, but it is also likely my final session as a community outreach and training manager with Consumer Action. I am stepping into a new chapter of my life. Now, while I've enjoyed hanging out with you guys all of these years, like they say, all good things must come to an end, and it's time for me to say goodbye. Happy holidays and wishing you the very best in 2026. Have an excellent rest of your day. Goodbye and take care.